Hello, traders. It's Wednesday, November 13th, and it's time for our live event. Harry, how are you doing today?
I'm doing well. How are you, Pete?
Doing good. When we spoke last week, we had all sorts of stuff coming at us. We had election results. We had the House and the Senate up for grabs. We had the FOMC statement coming up on Thursday. We had earnings coming in and economic reports. Kind of a crazy period, but we did a good job. And I think that we provided everyone with some fantastic picks. So, as always, I like to start off with a review of what we showed you last week, and we'll take a look at how we did. And then we'll just open it up to some questions right away. And then throughout the course of the live event, we'll be able to do some market analysis. So, my pick last week was Dash. I've got it loaded up here. You can see I'll go into a 15-minute chart. And we'll zoom back to that day, which is right in here. We had this nice move up. This is where the live event was. And you can see that Dash has been an incredibly good pick. Sunday's video, I posted Tesla. Sunday's video was right in here. You can see Tesla is higher. I would not have bought that gap up. So I'm not going to be here telling you that look at what a great trade you could have made all this money. Told you we want to wait for a dip and we want this breakout to hold. Well, guess what? We're there right now. So I'm going to drop an alert line. I'll show you how to do that. GTC, click the top of this, click the top of that. And now when I have that price point breached, I'm going to get an alert and I'll evaluate. Yes, this would look good. I can get long Tesla there. TWLO, that was from my video about 2 weeks ago in here. Look at that, baby. That's been nice. And then finally, Reddit was from a live event. I think 2 weeks ago, which is all the way back in here. And I told you this baby is going to run. This is a great longer term swing for months. I love that breakout. So I'd be looking to buy dips and add to it on a swing basis. Harry, what was your pick last week?
I believe it was Amazon. And take a look here. I was calling Amazon on that breakout last Wednesday where it broke above that mini compression there. And as you see, I believe on Amazon back then when I called it, it closed the day much higher, but we were looking at it somewhere around 208, 209. And as you see this week, you could have taken profit at any point. If you're still in Amazon, I actually may renew Amazon as a pick this week. There's a lot of talk about, Bezos is almost done selling all his shares, and there's some validity there. That certainly created this firewall, kind of a 200 price point. Every time you hit it, the guy would come in and sell, a couple of $1 billion worth of shares. But it's clearly broken through that. It technically looks great. It's got relative strength. It had it yesterday. It has it today. I really still like Amazon. And we'll talk later. One of my other picks is going to be a short, and that would be for Qualcomm, which I posted in the chat room earlier today. But I still really like Amazon and Dell, by the way, which was a pick, I believe, 2 weeks ago. Dell right now is actually, it's in a nice compression. And you see this sort of bull flag forming on the daily chart with Dell. It's well over all of its SMAs. Obviously it's a beneficiary to the clusterfuck that is SMCI. So I think keep an eye on Dell. That's one I'd alert. I put a nice alert here right at the high, 141.33 of Tuesday. And once it breaks above that, then you kind of have a nice clear sky ahead for Dell. But right now, Amazon still like it.
And that's interesting that you would say, okay, so we're setting an alert and I like the compression. With any stock, you're going to get a move higher and then you're going to get some profit taking. There's going to be some supply that comes in. and then the stock has to digest the news, and then it makes its next leg higher. So it's had a leg higher. It's going to digest those gains. We're going to wait. We're going to set alerts. And when we get that little breakout, we're going to evaluate what's been taking place and what the market's been doing. And yes, that could be a really nice entry point. I'm going to show you a stock today. I don't know that it's going to be my pick today, but it is a similar setup where we're aware that this stock could be setting up for a nice move, but we're still kind of in that holding pattern and we're waiting to see some signs of life.
Okay.
So let's talk a little bit about the market. You'd mentioned a short. Are you bearish?
I'm not bullish. I wouldn't say I'm, the market is, as we always say, the market is bullish until it isn't, right? And right now, looking at the market, you could see it's holding at where you would think it would hold. And if you go way back to other milestone points, for example, if you look at when the market was approaching that sort of 500 mark, right? And that would have been back in February of this year. I believe that's where it was, right? Back in, let's see, where was it? January, probably. Yeah, February this year. It takes a while. It doesn't just break right on through. You can go back to when the market was looking to break over 400, and the same thing happens. So here you have what it explicitly looks like an earnings chart, right, from the election, where on Wednesday the 6th, you get this huge gap up. And that gap up is maintained. So if you look at SPY, if it was a stock and not the ETF of the market, you'd say this is a bullish chart. This is now in compression. And what you would do is you would place your alert, just like we talked about with Dell, right at the all-time high, the previous high, 617. And if it breaks through that, then you'd be able to say confidently, we're back into a bullish pattern. So to me, it's just a matter of, can the market get there? Is there enough? It's already digested all the news. It's digested the news of, the only thing left, I guess, is the House. They just named the Senate Majority Leader. Senator Thune is now the Majority Leader in the Senate. So all the news has kind of been digested. What remains that can get the market over 600? And if it doesn't get there, do you get this sort of gap fill back down? Right now, neither bullish nor bearish. You?
I'm bullish. I am bullish, but I realize that after a nice run up like this, from November 5th, pre-election, you ran up from 570 to 600. So that is a nice gain of almost 5% in the course of a week. What more can you ask for? Really? I mean, in a week, 5%. Do you think it's going to go up another 10% in the next 2 weeks? Not likely. It's going to take time to digest these gains. Okay. There's going to be some natural selling and some profit taking. And so these gains are going to have to be digested. I think it's going to take maybe a week, maybe 2 weeks. Okay, well, then you start looking out and thinking, what's that next news item going to be 2 weeks out? Because that would probably be a critical window where you've got the buyers starting to wear off some of the supply, buy. And then whatever that event is in 2 weeks, could be the jobs report. That's where you're going to get your next leg higher. So in the meantime, I am looking to buy dips. I mean, that's what I would suggest for most of you, because if you try and get cute and short this market, most of you are going to overstay your welcome and you're going to have your head handed to you. So I'm really in a buy the dip mode with a long starter swing position on here, a add to the swing position here. Now our average cost is here, looking for another opportunity to add, but realizing that market's probably not going to go anywhere fast. You get a nice big move here, compression. Actually had a little pullback. Get a nice move here, compression. Then you get your next leg higher. So that's what we should be expecting when I look at fundamentals. I love everything that I see. I like the fact that the Fed is dovish. I like the fact that the economic growth is stable. I like the fact that earnings season has actually been quite good. I like the fact that there's bullish seasonality favoring us right now. So, yeah, I'm more bullish than you are.
Huh. So you got some two perspectives here. No, I don't think they're necessarily contradictory. Like I said, I would not be surprised. I mean, it's bull. Like I said, it's bullish until it isn't, and certainly if it breaks above 600, we're gonna, I would start putting on some long-term bullish swings. It's an interesting,
Let me add one note here very
yeah.
quickly because this is really important. Okay. What is the most of us are day traders in this live event? What is the best scenario that we could hope for? We turn on our screens in the morning. What is the worst case scenario we could hope for? The best case scenario is a gap down. Wait, Pete, you're bullish and you're telling me a gap down is what you want. Yes, because gap downs have a chance to reverse and fill in that entire gap. Okay. It will establish early support. We'll be able to evaluate how aggressive buyers are. We'll be able to easily find stocks with relative strength because those are the ones that aren't down at all. They're treading water at the prior day's close. Okay. So if the market reverses and it moves higher, we're able to join the longer term trend. We're able to buy the dip. We're able to confirm support, and we're able to easily identify stocks with relative strength. So when you see a gap down, you should not be thinking, oh my God, this is bad. You should be thinking, awesome, this is my best scenario. Conversely, gap up, danger, Will Robinson. Gaps up to a new all-time high are almost always faded. So at minimum, you're going to have a bid check. If you are long swing trades and you get that overnight gap up, take profits. You can always get back in. And when you get that pullback, you're evaluating it. Is it shallow and brief? Good. Means buyers are there and I can start to enter my long positions when I see that bid check run its course. If I see stacked red candles, it could be easily a gap reversal and a bearish trend day. So I do not buy early in the day when I have a gap up. Super
A quick
important.
mindset thing, when we say buyers and sellers, what should come to your mind is institutions, right? If the first thing that comes to your mind when we're saying buyers and sellers is you think retail buyers and sellers, people like us, then that needs to be readjusted on your mindset side. When we say buyers or sellers, we're talking about huge amounts of liquidity, huge amounts of volume. Retail sellers are not enough, even in combination with all combined, do not have enough liquidity to move markets. So we're talking about institutions and their buying and selling. Good mindset question here for both of us. How long did it take you to get rid of the doubt? Can I really do this for a living? Will I blow up someday after having become consistently profitable for a while? Question mark. That's from Trans Avalon. I'll tell you mine, and then Pete, I'm sure you've certainly had ups and downs back in the days when trading was not as simple as it is now. Certainly, I mean, look, for me, it's always a matter of the amount of knowledge, the statistics behind the trades, the win rates, all through my careers. Whether it was in academics or running a business. I would not, when I used to manage a business, I would actually, whenever I took a job like that, stop and do the jobs of everyone that's underneath me, everyone that reported to me, all of their divisions. I needed to make sure if I'm managing something, I knew what I was managing. I knew what they were going through. I knew what they were doing. So I would master those jobs, and that gave me more and more confidence that I could do the job that I was doing. When I took on trading, and at first, of course, I got wiped out, just like everybody gets wiped out. I got my ass handed to me, not once, but twice. But I went in and studied it at every possible angle. I looked at the most ridiculous, I looked at all those YouTube videos. You can make billions of dollars by following this 3-bar system. And I looked at some that were more legitimate. And thank God I found Pete, one option and found something that made actual sense. But I made sure I knew inside and out that there wasn't a question I didn't have answered, and that there wasn't a technique I had not tried. I made the best use of paper trading you could possibly use. And paper trading is your friend in the beginning because it allows you, whatever platform you use, I like the paper trading, I think, or Swim, to experiment without getting your ass kicked, right? You can try different trades. You could see, oh, what if I did these type trades, that trades? And finally, when I was ready at that point to go in, I expected to be profitable. And then becoming profitable week after week only confirmed that expectation. So, Pete, what about you? How long did it take you to finally go, yeah, this is what I'm doing for a living?
Well, first of all, I think it's been 4 years now. When Harry came into the chat room, he didn't ask a lot of questions. He just sat back and he was a sponge. And when he finally started to wrap his arms around this, wow, you couldn't shut the guy up. I mean, he was asking questions, he was doing posts, he was writing articles. He was like, oh my God, the light has gone off and I'm absolutely killing it. Well, he already had a lot of the basic skills. So, very good analysis of risk rewards and the whole concept of applying odds. He was a bit of a loose cannon, and all he really needed was structure. And once he had that structure and the edge, he was off to the races as fast as any trader that I've ever seen. So you can't get frustrated that your learning curve might take a little bit longer than other people because they might have a lot of experience. If you have no experience, you're starting from square one. It's going to take a while. Okay. For me personally, when I started out, I just hit a very, very tough market patch. And although I was learning, I was losing money, and it was a Chinese water torture. And finally, the market turned around, and we were preparing for an invasion of Iraq in 2003. And so the market was just bearish and just ticking lower. And then you get these big spikes up. So you were damned if you shorted, you're damned if you didn't. You couldn't go long. The end of the story is that, yes, when the market finally started to release, it was like shooting fish in a barrel. It got very easy. And I was able to go from everyone has told me that I'm an idiot to try and consider trading as a professional occupation because most people lose. And so you have that in the back of your mind. I'd been in the business for a long time, so I knew the failure rate. And getting past that point is critical. But once I started to identify all the puzzle pieces and fit them together, then I knew that it wasn't so much a matter of, can I do this? Because I had an edge. It was a matter of, stop doing stupid shit. And that's a big difference. Okay. So some of you are going to get to that point, and then it's just a matter of really writing diligent trade logs and going back and analyzing every day what you did right, what you did wrong, what you were thinking at the time. And I'm not talking about using some trade sync journal where you put a couple of words in behind each trade. I'm talking about like a diary every day of what you went through, and then reviewing that on the weekends and identifying things that you're going to work on the next week and progressing in that fashion. If you do that, committing something to paper really resonates with you. So I'd encourage all of you to do that. And then you'll stop doing stupid shit faster than you would otherwise. And then everything becomes refinement from that point forward, but you're making money. So that's just been kind of my process.
The don't do stupid shit rule. Much easier said than done, but yeah, it's pretty key.
Yes. Well, one of the stupid things that I did was I thought that I knew more than the market did. And I thought that my MBA somehow equipped me to do fundamental analysis better than other people. And once you figure out that you don't know anything and that there are always people with better information, then you've reached a huge turning point, because now you're really leaning more on technical analysis and you're not in a mode of the market got it wrong, I'm going to get it right, and I'm just going to wait for everybody else to wake up and then I'm going to make a ton of money. It doesn't work.
I
Just
mean,
follow
a really
price.
easy exercise, a stupid shit exercise is, you should all be keeping a journal. And in the journal, when you make a trade, before the trade closes, or when you first open it, put if it's not based on clear tech, if you cannot justify the trade by looking at relative strength or the market or these technicals or the daily chart, whatever it may be, if you cannot justify it and it's based on a I feel, I think it should, just type in stupid shit next to the trade. End of the month, look and see how much better would your P&L be if you just eliminated all your stupid shit trades. I guarantee you it would make a huge difference. Just like you're always trying to get an edge. It's all about the edge, right? Otherwise, you're looking at 50-50 or worse than that. And you need an edge. Without an edge, you just put your money in SPY and sit back, or 401k, and let the market do this thing. Over time, you will make money. To beat the market, you need an edge over the market. And if you eliminate stupid shit, you're going to take away a huge chunk of percentage of that hurts you in getting that edge.
Quick note, market analysis. Earlier today, it mentioned this is a good place to get long in here. Everything looks good. We'll get into the details later. But right now, I want you to pay attention, because we're hitting resistance at the prior day's high. This has been a wimpy, choppy grind higher. Well, so what does that mean? That means that we should tame our expectations for a big rally today. Mixed overlapping candles, long wicks, long tails. This is not a strong move, and we are at a resistance level. So when we're long here, we're looking for these resistance points, and we're looking for price action like a bearish hammer off of the high of the day, resistance at the prior day's high, nice long red candle. I would be taking profits on my longs right here. So now that I've given you something to look at while we continue the live event, we'll see if the market retraces.
Looks like a little bit of a pullback here after it hit the high of the day. So I know great TA and Qualcomm. So Qualcomm probably will be, like I said, Amazon remains a good long pick for me, and I'm going to keep that as a pick for the week. But I'm going to add Qualcomm to it. And the reason why is, if you look at the daily chart on Qualcomm, you'll see two things. One, you will see that after a failed attempt on Wednesday of last week, and this was, of course, you got to look at this Wednesday and Thursday. This is when the market was just gangbusters, right? So it just pulled everything up. And it did the same thing with Qualcomm. Qualcomm did not have relative strength on those days. It was just being dragged up, rising tide, lifts all ships with the market. But could it hold? Once the market stopped its euphoric jump, could Qualcomm hold there? And it couldn't, right? It fell below the 100 SMA. It fell below the 200 SMA. And then for a little bit, on last Friday, it looked like maybe, just maybe, it might find support at the 50 SMA. Okay. Nope. Monday did not. Monday looks like 50 SMA, going to break below that, try to rebound a little, and then yesterday it opens clearly below that, confirms the SMA break on that. And then today you see it even breaking below the horizontal line, which was kind of the low on 1031 of 162.08, and on yesterday, which was 161.86, breaks below that. Now you have this clear downward trend. You had an upward sloping trend line that comes in from August 5th, and that has a lot of touches on it, 9.6, 9.10, 10.23, and so on. And now you're clearly below that. So you've broken below all technicals. You have decent volume in the prior days. So it's not like this is a low volume breakdown. I like Qualcomm short here.
And on a M5 basis, you can see how the stock is below the prior day's low. It has relative weakness. It is below VWAP when what? When the market has been doing this. Okay. There are no buyers. They are being overpowered because any bid that's market related in here is being smacked down now. And so yeah, that's going to be a really good short. So
Yeah, that's
I
my pick
like
of
that
my
short.
other than Amazon, that's my pick of the week there. My new pick is Qualcomm short.
I mentioned this in the chat room earlier today. The fact that we've got the automated trend lines has actually added a really important variable for us. I love my trend lines. I use them all the time. And there's a search that shows us these trend line breakdowns. And I'm going to show you one that I like, and that is SWKS. Here's a nice trend line breach. You can see how the stock is below that horizontal support, and consistent with what Harry was mentioning on Qualcomm is you can see how the stock has not been able to get above the major moving averages. In this case, the stock has been below all the major moving averages for a long time. You've almost got all three moving averages lined up to where the 50-day is lower than the 100-day, is lower than the 200-day. When you get all of them lined up like that, it's a strong trend. And you can see this downtrend that started back in July. So this is a weak stock, and this is a post-earnings reaction.
Mhm.
Didn't like it. Got a horizontal breakdown, trend line breakdown, relative weakness, M5. Let's take a look at that chart, see what it's doing today. When the market rallies, the stock could not get above VWAP. They're smacking this thing down. They're playing whack-a-mole with it. If this market does not have a strong uptrend, which it does not, and it sells off, this will be a nice short. Again, I don't advocate that most of you do this, okay? Because you're going to overstay your welcome on shorts when we actually have a pretty bullish D1 market backdrop. But for pros, yeah, this is going to be a decent short in here. So let's answer a question or two. Have we got any? Let me take a look here, see what we've got. Any thoughts on an MU short? Again, in the context of being short anything, the stock really has to look attractive. That is nice selling pressure. You can see how this stock has not been able to get back to VWAP. So
There we go. Can you hear me now, Pete?
I can hear you now.
Okay, I think I dropped off there for a second. Sorry about that. Okay, great.
So let me take a look at the MU D1 chart. And you can see how the stock is testing this 50-day moving average right now. And you can see horizontal resistance. I'm looking at MU. That was one of the questions
Got
that
it.
was posted. So yes, if MU can get through this 50-day moving average, close below it, I would take a short position and add to it if it can get below that low, which was at 99.07. But again, because of my market bias, I would not be looking to swing any shorts. I would only be looking to day trade from the short side. Okay, you're trading against a strong market. So you need to keep that in mind.
And there is because someone also asked about coin in here, and there are certain stocks right now that have defied technicals a bit, become and acting somewhat like momentum stocks, coin as an example. And these are fine to day trade, right? Keep in mind, if you are swinging a stock like this, if you were swinging coin long yesterday, are you okay with the drop today, $10 drop in coin? Are you holding that? Because technically, if you want to look at the technicals on this, you don't have support. You have support down at 296. That's where the gap up started. So there's your technical line of support on coin. Are you okay holding this for another $8 drop in the stock if you're long? Now, if you're day trading it, for example, you take a day trade short right now on coin, you certainly wouldn't want to swing that because if you look at the daily chart, there's nothing there to say that this is a short, but it could be a good day trading short. But in order to do that, you have to be nimble, right? Now you're talking about using VWAP and intraday measures to get out of the trade if you get it in the wrong direction because you're going against what is a clear upward bullish trend. And this is where the whole we can't keep going up idea. I look back to a trade that Dave made in the chat room yesterday where he took a long on MSTR yesterday and it paid off nicely. A lot of traders would look at MSTR and go, this is not, I'm not going to go long here. This thing has run so hot, I'm not going to go long. But if you look at the 15 EMA, it is not extended. And Dave went with the price action rather than that nagging feeling of, well, it can't keep going up. Well, it did. And he cashed out this morning and took a nice profit. So you just have to, differentiate when you're looking at stocks like coin. Uh, you're not going to be 100% technical based. You're going to be tied into Bitcoin. You're going to be tied into the general feeling on crypto. So then you have to be very nimble, and I recommend day trading, which is as opposed to swing.
All right, took a look at WDAY. That was a question for a long. And you can see how the stock has not been able. Now, again, when you guys are asking us, will you take a look at this long? Will you take a look at this short? Please give us your time frame. Because I can look at something and say, this is a great short on a day trading basis, but on a longer term basis, it's really a good long. So please, what are you looking at? Give us something to work with here. Okay. Not just what do you think of WDAY? I see a wedge formation. I don't see the stock breaking out. I don't like it on a day trading basis. It's got a gap up. It's testing VWAP a couple times, but I need to see much better strength in here. Didn't see it. Wouldn't be buying it for a day trade on a swing trading basis. D1 chart. Let's see what we got working there. And there you've got a very choppy stock, okay? Drift, drift, drift lower, explosion higher. What caused this explosion higher? Was there news? What's going on? Volume is pretty good, so there's something going on with it. You're stacking some candles. It's gotten through this horizontal resistance. My issue with it is that the stock has been pretty patchy and choppy in the past. I would need to see the company raise their guidance. Something big's got to be going on because this stock has gone from 240 to 280 in a matter of a week. It's overextended, in my opinion. I wouldn't be chasing it here. I would be looking for dips, and I'd want to see this breakout preserved if I was going to buy it. That retracement and then that bounce off of that would tell me that buyers are still interested even at this breakout.
We've been asked if we can do a little analysis on Microsoft. You can look at Microsoft in different ways here. First, if you go way back to when it broke 400, right? So let's go back to January of the beginning of the year, and you look at it there, and you put a horizontal line at, let's call it 400, 402, and you put another horizontal line on your chart at 445, right? Other than a quick breakout back in June to July, Microsoft has stayed in a pretty narrow corridor. It hasn't moved 10% up or down in either way. It keeps going up, hitting that line, going up again, going down, going up, going down. And now, as you can see, as we get closer to today, the compression is starting to get tighter and tighter. And that is evidenced by looking at the SMAs. When you see that type of price action, you'd expect the SMAs to start to converge because the average price over the last 50 days is going to start being similar to the average price over the last 100, similar to the average price over the last 200. And sure enough, if you look at Microsoft, 421.50 SMA, 425.100 SMA, 421.49, 200 SMA, right? So now you have three key moving averages all converging or within $4 of each other, within 1% of each other on Microsoft. And today, yeah, it's now breaking up again past the 100 SMA. So what does that tell you? Well, it's relatively strong today. I think it could be good for a swing, even though you don't have technical confirmation. You do, looking at the price action today as it broke above VWAP, and on the 5-minute chart, it just keeps stacking greens here against the market. I'd be comfortable taking a long in Microsoft. I would use that 100 SMA as your get the hell out point if it dropped below it. But you have a lot of space till you get to the upper bound on Microsoft. You have a lot of space till you get to the 445. So you can make a lot of money even though it stays in that corridor. Microsoft right now, probably a decent long, but keep an eye on that 100 SMA and make sure it stays above it. And certainly the 250, which is at 421. What do you think of Microsoft, Pete?
I think that, are you hearing some music?
I am.
Where's this music coming from?
I don't know. You felt like a little guitar action going on.
I think it's,
There you
yeah,
go, Will.
it's Will. It's
Will
Will.
jam out.
Will's playing some guitar. He's chilling out. Let these guys do what they do. I got to practice. So anyway, I see a giant wedge formation. I see 6 stocks that we've already mentioned today. Every single one of them is far superior to what I see in Microsoft. Why would you trade anything that is not the best? I wouldn't. So I don't like it for that reason. It's converging, giant wedge formation on a D1 basis. Like Harry said, converging moving averages, no trade here.
And then similarly, we got, by the way, someone wrote that your RGD pick has paid out nicely for them. You said just looking to take profits, but also mentioned you'd be an RGD for the long term. What's your latest thinking? You already kind of went over that. So, Matt, I just encourage you to go back to the beginning of this broadcast and you get those thoughts. But of course, we're being asked obviously about NVIDIA as well. I wouldn't touch NVIDIA right now. It's in compression again. Just like Dell and all the others. You this is a perfect. You set your alert, set it, forget it, wait for it to trigger. I'd set the alert right at 150. That's clearly where the all-time high is. It's clearly the top of this compression. It's relatively weak today, but 150 is where I'd set the alert. I wouldn't be going long or short until it breaks. My mic?
All right, I'm going to continue while you guys figure that out. So I'm going to take a look at a stock that I noticed earlier today. Going to do a little longer term fundamental analysis on why I like it. It was UPST, and I believe that was in one of my breakout searches. So I'm just going to look through
There we go.
and
Hopefully
see
I fixed
which
that.
search it came up in. All right, and so why do I like UPST? What's going on? It could be my pick of the day. I love this breakout, first and foremost. So you can see that the stock has had kind of this chunky move higher. And we've got a nice rally here. We've got a bullish flag. Okay, breaks out above that horizontal resistance. Another bullish flag in here, breaks out through there. We've got earnings, long green candle post earnings. So yesterday, we know that the market sold off pretty hard early in the day, and the stock tested the open from this long green candle. In the strongest of situations, we don't want any of this long green candle tested, but it was particularly long post earnings. Okay. The midpoint is what we'd really like to see preserved. Well, it has been preserved so far. We did have one little poke down to the open, but that reversed very sharply. So zoom out, take a look at the long-term chart. Okay, this is a weekly chart. So now we're going really far back. Here's the point that I want to make is a lot of people are attracted to bottom fishing. They're way early on bottom fishing. They'll be looking at a little bounce in here going, this is the low, I'm going to buy in here. When you get this type of selling pressure in the back of your mind, you have to be telling yourself that this is going to take a long time to work off. The first clue is an oversized bounce. Okay, well, we got one right there. Really big bounce. It's still not time to buy because we still need to form a higher low, which we have here. It's still not time to buy because we have to be able to get through this resistance that was made by the recent bounce. So we take the high from that bounce. Once we can get through that, now we can feel pretty confident that a trend reversal has a good chance of happening, but not before then. And this is where we would only start to put on starter long positions for swing trades with the intentions of adding as we have confirmation along the way. So this first leg allows us to get in, and we're still evaluating everything. And when we add at higher levels, our average cost will be lower than where we're adding. So we always have that as a bailout. If the stock reverses, we can always exit and scratch at that price. And that's what gives us confidence to keep adding as the stock moves higher. And that is a question that I saw earlier today is how do we know when to add to bullish swing positions? So I'm explaining that to you right now. So what did I like about this? I like that breakout above those trend lines. I like the fact that this long green candle is being preserved. I like the fact that the stock bounced like mad yesterday and closed near its high during a fairly weak market day. Let's take a look at the 15-minute chart, see what clues we might have in there. There's your initial move higher. That was the move yesterday. So what I'd like to see is a move into this gap today. And the stock did have some relative strength earlier today, going to the M5 chart, but no volume yet. Okay. That was the missing element. We had that nice little relative strength in here. And so we're waiting for that relative strength to continue. When we start getting into this gap, we want to see the volume picking up and we want to see that relative strength. So, how do I deal with this? I take an alert line, GTC, click the high of the day. I need to get through that. And if I have all the components I'm looking for, UPST could be a nice long. But right now, it's not going to be my long of the day because I don't have the price action to support that. But it could come back on my radar very quickly if we get through that
Good
horizontal
pick
resistance.
to keep on the radar. Here's something I want to talk to people about. Someone asked, any real negatives to using bull ETFs like TSLL or AMZU? The drawdowns are larger for an investment standpoint, but short-term trading, they seem like a good alternative. So you're talking about leverage ETFs, and what a lot of people don't get about that, and the danger there is a compounding error, which is what happens with these. So I'll explain what a compounding error is. Let's say you have a stock that's $100, right? And you have an ETF that is 1.5 times, right? So that stock goes up $5, from 100 to 105. The corresponding ETF would go to 107.50, right? So, okay, great. You get 1.5 times the result. But let's say now the next day, that same stock, which was went up 5% from 100 to 105, falls to 5% that next day from 105, and it goes down to 99.75, right? So you had a 5% jump and a 5% drop. So on the stock side, it goes up 5% to 105, and then drops 5% from 105 down to 99.75. The ETF, on the other hand, goes up 7.5% to 107.50, but then the next day, when the stock dropped 5%, the ETF drops 7.5%, but now it's dropping 7.5% from the higher price. That will wind up at 99.43. So now the stock went nowhere. I mean, the stock went up 5%, dropped 5%. So it went from 100 to 99.75. The ETF, the leverage ETF, same price action, went from 100 to 99.43. That is so there you have that 32 cents there is compounding error. Now that happens over time. Now that's an extreme example, but it happens over time when you have these up and down moves. Leverage ETFs work when you have a continuous upward or, on a bearish ETF, downward trend that is kind of nonstop and you can count on it. But if you are looking at a stock that's kind of choppy right now, if you were to do for example, the Tesla ETF, leverage ETF 2 days ago, you would have lost money on that as opposed to just going straight with Tesla stock or Tesla options because of the compounding error. So obviously, the obvious issue of your gains are much higher, your losses are much lower, but the compounding issue on those leverage ETFs also takes away a little bit of your percentage edge.
Yep. And the leveraged ETFs, the way that they're structured is that those ETFs use options. When they use options, they are exposed to time premium decay. So for that reason as well, you do not want to just own them and park on them for weeks or months on end. They will underperform. If you're looking to day trade them and catch a move, fine, but I would not overnight them. We had a question on GDDY. Go Daddy. Man, is that a nice pick. Wow, you got a good one there. I hope you caught that breakout because that's exactly what we want to see. So you got your earnings reaction here. You've got a big breakout. You have the stock closing on its high of the day. This long green candle, not only is it preserved, the next day the stock is actually moving higher. So that tells you that these buyers in here couldn't get enough. They're still in there. If this were all fluff, it would have been whacked down. They would have played whack-a-mole with it. They didn't, and they couldn't knock it down. So that gap up was legitimate. That gap up was legitimate. Now you have another breakout. Really nice pick. Well done.
Beautiful. And it's at an all-time high. So you have no bag holders up here.
Right.
Speaking all-time high, we have a couple of questions actually on NOW, NOW. Wow, this stock has taken off. I mean, it's an expensive stock, so anyone playing it on the retail side is most likely using options. They're expensive options, so anyone playing on the retail side using options are most likely using debit spreads. And to be honest, this is a damn good stock for a debit spread. It is at an all-time high. It looks like there's nothing stopping it. The volume has been good on it. You don't have earnings until January. You have a bit of an extension away from the EMA, so I keep an eye on that because it's not a parabolic move, but you have had. I mean, this stock has gone from 943 last week up to 1,060 this week. So you've had a 110% move in the stock in about 8-9 days. But I mean, just like GoDaddy, this daily chart on NOW looks great.
Yes, TMUS. I've been writing articles recently. It's one that I love this pattern in here. The stock looks really good. It's on green royal flush. You can see how it's continuing to grind higher. Love that chart as well. Similar to GoDaddy, this is a buy the dip kind of stock right at that VWAP. So once you have market support, you can feel pretty confident getting long the stock at that level. And then you get the release. And on a choppy stock like this, you're just looking for big moves higher that you can sell into strength and take gains on. You don't wait for the dip. You kind of sell into these big moves. And then you can reload a stock like this because it's fairly choppy, kind of a boring stock, if you will. But if you use a little bit of timing and you sell into strength and buy into weakness, you're going to be able to scalp it nicely. Let's see, CELH. Harry said a few weeks ago that the soft drink sucks. Oh no, he said that if it drops below 28, short it. And now it is below 28, but it went up today. So
I'd still keep it short. I mean, I wouldn't really touch it today at all, but I mean, if you were short, I mean, as long as it stays below 28, I'd keep it there.
Yeah, yeah. I mean, it's in a severe downtrend. And what has the market done since that earnings report right there in the last week? Look at these last 5 candles. And in the back of your mind, you've always got to know what the market has done in the last week. Well, I've already shown you we had a post-election, post-Fed rally. So when the market's been in go-go rally mode, what has the stock done? It's continued to drift lower. So any buying that might be market related has been offset by sellers saying, I want to get the hell out of this stock. And it's continued to drift lower. So see nothing there that tells me that this stock is remotely close to bouncing. Harry, what do you think of CVNA? I've got a question on CVNA.
All right, let's take a look here. CVNA. Wow, this stock has, I mean, I remember when this damn thing was like at $10, $7. CVNA in compression right now after a nice gap up on the end of October. It's certainly not a short based on its daily chart, but it's also not a long based on its relative weakness today. This is another one here, which it looks like it is, in a nice wedge here that probably pinpoints at a price of around 247. I would need to see a breakout above 247 here to get bullish again on this stock. But I mean, great daily chart. If you're long, I wouldn't close the long because you get a dip today, but I wouldn't go long if you aren't already.
The stock also does trend very nicely. So when you look at these previous dips back here, back in June, once it starts heading lower, it's just a steady drift lower. Then once it recoups and recovers, you've got this nice steady grind higher. Then there's a nice little steady pullback in here. This price action that we saw from September 26th till the earnings announcement, this is such nice, tight, orderly price action. This is what you want to see because every sell order is absorbed by buyers. They just can't get enough. Okay. And that's why you don't get any dips. And that's how these nice, tight little price movements actually form. So bye bye bye, bye bye bye, bye bye bye, bye bye bye. And so now the stock has had a really nice pop up. It's going to need time to compress. It has to digest these gains. What do I do with it? GTC, click on the top of that, click on the top of that. Now I have my alert line set. If it gets through that, it'll be on my radar. No, I don't have to buy it. I'm going to evaluate what the market's doing. I'm going to evaluate what the stock is doing. If it's got heavy volume and relative strength, yes, then I might be looking to add to a swing trade that I have on from lower levels. So when you see a strong trend like this, and you are long a longer term swing trade, you expect that somewhere along the course, you're going to get a round of profit taking. So you wait for that profit taking to run its course. You wait for the stock to bounce off the 100-day moving average. Oh, it's through the 50-day. Ooh, that downward sloping trend line has been broken to the upside. Hey, I think I'm going to add to my position here because the strength of this trend tells me that the dips will be brief and shallow. I add here, and now I've got this to lean on, and my average cost is way the heck down in here. And so you keep adding on confirmation. If this was the third leg, you'd wait for this compression to be resolved. When you get the breakout, you're ready to add. That's how you do it.
We got some questions here on snow and on crowd. I mean, a crowd, when it isn't crashing the entire internet, looks pretty good on a daily basis. Certainly, it has cleared every technical hurdle you could want. It is now back above the gap from its debacle way back in July. It's still got some distance before its all-time high. This is a stock, though, that makes some pretty big daily moves. You look at that ATR on this stock, and it is disproportionately large. So you just got to be careful with that. But crowd is, for me, if I were to play crowd right now, I would do a call debit spread. I would probably do 350, 750, 360, 250 for $2. And that would be expiring on Friday. And then snow, which Kramer doesn't like, so that means it must be good. Snow, certainly inverse Kramer here. Snow certainly has broken above all two major SMAs. It has some distance before it gets to its next real resistance at 144. It seems to be moving nicely after hanging around the 100. I like snow as well. I probably like crowd a little bit better than snow, but I like both.
Yeah, I agree with your assessment of crowd versus snow. So crowd, let's go to the weekly chart of crowd. Look at this chart, okay? Which racehorse do you want to ride? Do you want to ride crowd, which is within striking distance of the all-time high? Here's the weekly chart of snow. Or do you want to be down here trying to pick the bottom on a stock that has been crappy? I'm going to pick crowd. That's my assessment. This stock is hitting a support level from back in June of 2022. You can see that's horizontal support. So it's taken 2 years, and you haven't made shit on this stock if you're a long-term investor. Okay. It's a weak company. This is no bueno. It might look good today, but you want sustained upward momentum as a short-term trader. You don't want a dog that's just dogging around and trying to find a reason to rally. And maybe there's a short covering rally. Maybe there's some news that comes out that eventually gets the stock back on asset managers' radar. But right now, they're telling you there's no reason as an asset manager with billions under management for me to even look at snow. Okay. This is trash compared to some of the alternatives I have in that same space. So they'll be more apt to buy PANW. There's a weekly chart for you, or crowd. That's how you need to be thinking about it. You are the asset manager. You just don't have billions of dollars to invest, but you want to be buying strength because that's what they're buying. You don't want to be the dip buyer who's buying a 2-year-old dog that's going absolutely nowhere because you're not smart enough to find value like they are, because they have research departments that they spend billions of dollars on. Okay, you don't have that. So do what they're doing.
The anybody, by the way, I mean, snow, you're right. I remember you mentioned earlier, snow has been such a disappointment for investors. Anyone who got in on that IPO a long time ago has lost a significant amount of money and is probably just waiting to reallocate their capital into a company that could actually pay off. But there's been no love for snow. Every earnings that come around are like, this is it, this is the one that's going to go, and just doesn't do it. Thoughts on Disney has earnings tomorrow. That's the thought right there. Has earnings tomorrow, which means you don't touch it. That's it.
Yeah.
Done.
And I think when I looked at it earlier today, it's bumping up against the 200-day moving average, something big. So here's Disney right here. And let's take a look at it. It's through the 200-day moving average. So it's done well there. But yeah, hover over the E, earnings tomorrow. So all of this looks good. This is a choppy move higher. It's gotten through some trend lines. Go into that weekly chart. Dogzilla. Another one of these. We got a market that's at an all-time high right now, folks. Why are you looking at a stock that is basically where it was 2 years ago? Yuck. I can't say that more strongly. Okay. So, yes, maybe it has a chance after earnings today to show that they've done some great, wonderful things. But I'm certainly not going to be guessing that the reaction is going to be good because there could still be plenty of sellers looking to unload Disney stock. I do want to bring one stock up, though. This is one of your picks. It's been on my radar, too. And because we don't do these but once a week, here's a beauty.
Mm-hmm.
LUNR was a stock that we were looking at, and we kept drawing these trend lines here, these looking for that bullish flag. And there's your bullish flag right there on that long green candle, and away she goes. So earnings coming out tomorrow. No, I would not be trading this, but this is just a stock I happen to notice on my list, and
Yeah.
I
Love
know
that
that Harry and I have mentioned it in the last couple of weeks.
one. And then someone asked, I have minimal time to trade after 7 a.m. PST due to work. Is day trading pre-market through the open a terrible idea? Yes. Should I focus on longer term swing trades for now? Yes. There's your answers. It's just terrible. Don't you mean you have limited time? You're trying to catch a momentum move. You're looking at low volume pre-market. You're trying to, see if you can grab one or two quick trades. I get the appeal. I get the whole idea that that's what day trading has been droned into everyone's head is. It's not. That is not day trading. That is gambling. What you should do is take these picks, whether it is, Qualcomm short or Reddit long or any of these, and just put on a swing trade. You can use debit spreads. You can use the stock itself. Put on a swing trade. Check it every morning. You can easily check it on your phone at work, whatever. But you don't have to monitor it continuously. You set your alerts as to when you would get out, and that should be able to ping you anytime during the day. You get an alert. Oh shit, it dropped below this or it went above that. But until you have time, and I would recommend after work, you spend time studying charts and you spend time looking at your trades, and you can do a lot of things when the market isn't in session to help you improve and help you learn. But don't rush it. Don't try to get in there because, oh, I have 30 minutes before I have to go to work and I can grab some things pre-market, try to sell them at the open. Don't do it. It's going to wind up burning you on almost every single circumstance. So stick to swing trading until you have time to actually dedicate to doing more than that.
Yeah, and it's when you are day trading, it is precision, precision, precision. And all the tumblers have to line up. And so you've got to be engaged all the time during the course of the day. What's the market doing? What's the stock doing relative to the market? And it requires all of your attention. But a good point that Harry made was you have time during the day. If it's a half an hour or an hour, you're able to run searches, look for stocks, set alerts, set orders for the next day, monitor position, set targets. So if you could put 30 minutes in a day, you can do some very effective swing trading. And then on the weekends, you're doing a little bit more research. If you are a longer term swing trader, meaning that your trades span 90 days or a quarter, then know that you've got to start incorporating some fundamental analysis into your trades because now you're spanning an earnings report and fundamentals become more and more important the longer your trade duration. If you stay inside of 90 days, then you can focus predominantly on technical analysis. You just have to know when there are key corporate events like earnings report, or maybe there's a special conference or a new product
Mhm.
release.
Heikin Ashi or candlesticks? I mean, candlesticks. You're using candlesticks for most of your analysis. Heikin Ashi is a trend candles, and Option Stalker actually has great searches where you can look for, the Heikin Ashi continuations, which is what you really want to see when you're looking at Heikin Ashi candles. You're looking to see two flat bottoms or two flat top candles in a row, and you get this sort of nice continuation of the trend. But you don't want to use Heikin Ashi candles as your regular analysis of the price action. You want to use them to see how the trend is going, and use it as another piece of information, like a trigger point. And then that's why we have them. Pete has them here as a search variable in custom search, where you can search for Heikin Ashi continuations.
Can we please do some analysis on SMCI? I don't have to. That is like, hey, it's a big time short. I guess it's going to be possibly delisted on November 16th, I
Yeah.
read. They have accounting issues. You don't know how that's going to pan out. So you had earnings, I believe, last week. The long and short of it is it's a short.
Yeah.
That is the long and short of it is it's a short.
They didn't have to split the stock; it split naturally.
That's right. Yes. So I would not short it with a big event coming up, and they're going to try and do whatever they can to keep it listed. So watch for them to have some type of interim statement or whatever. The easy money on this short has been made over the course of the last 3 weeks when it plunged from $40 and fell through the support level. Okay, you've gone from 40 to $20. So you've had just incredible profits. At some point, the people that are short, like Hindenburg, they're going to want to start taking some chips off the table, and they're going to start
Yeah.
gradually buying some shares down here. So you don't, when they move, it's going to be like turning a battleship. And I would not be surprised if they've been supporting the stock a little bit in here, and looking to continue to buy on every move lower to unwind the position.
It's amazing that for the longest time, this was the number one stock of a year in terms of percentage returns. You did not get better than SMCI. If you had bought SMCI way back, in June of 2023, and then just rode it up, there has been no bigger return stock, and it was always number one, like Nvidia number two, and so SMCI was the number one stock. And now um, the fall from grace that this stock has had and this company has had, um, that's just, it's just shocking. It's just a shocking crash of wealth and that whole industry. So it'll be interesting to see if they delist. I agree with Pete; they'll do everything they can not to. I mean, if it's anything, you're right. It's a short. It just be careful, because when those shorts start to bail, remember, when you close a short, you're buying back a stock. A short is, hey, I'm going to borrow 100 shares from the broker. Thank you. They don't care what price that you borrowed it at, and they don't care what price you're going to give it back at. They just want their 100 shares back. You immediately sell those 100 shares. You're hoping it drops so you can buy those 100 shares back at a cheaper price and pay off your debt to the broker, which is you owe them 100 shares. In order to do that, you're still buying the stock back, whether it's at the cheaper price or not. So when you close a short, you are buying the stock and then handing over those shares to your broker. All of those shorts close at the same time. That is a lot of people buying a stock back, which to the price action looks just like a long. And that's what a short squeeze is. Everyone closes shorts at the same time. Everyone's buying back the stock at the same time. Stock price starts going up because it's a lot of buying coming in, but it's really closing of shorts. And there isn't a higher short interest out there than an SMCI. So when those shorts close, get out of the way.
I'm still looking for my long today.
Hmm.
So if you're watching the video in the live event, you'll see me flipping through a lot of different charts and just looking RBLX. I took a look at it. I like the breakout. That's a question that came up. I like this horizontal breakout through resistance here. Poke, poke, poke. It's trying to get some escape velocity, as I like to call it. So it looks good. This is a nice, big, deep drop. So you can expect some volatility in the stock. You can see that it's got a relatively choppy price action. What that tells you is that you don't have to chase this stock. Whoops, that's not RBLX, that's BLX. RBLX looks like this, much different. But yes, I like this breakout here. I like the fact that post earnings, it's been able to gradually work its way higher in here. So yeah, this is encouraging. Weekly chart, what's that look like? You got horizontal resistance right here. And you'll see me zooming out on a weekly chart today because it's easier than me scrolling in and out. But that horizontal resistance is going to be there for a little bit. The stock's trying to work through it. So that's a major price level. I don't think you have to hurry in here. You want to see a nice, clean break through that. And you're starting to kind of see that that might be forming right in here. So yeah, be mindful, maybe set alert at the high here. I like
We just
RBLX.
had a news break on RBLX, by the way. RBLX talk of database leak. So I don't know how much that'll affect it or not. Doesn't seem to have an impact on the price action right now, though.
Okay.
Still looking for that long, huh?
I am. AMLX, I'll take a look at a few stocks here. AMLX, that's going to be biotech. Somebody asked me about that last week, I'm pretty sure. And my comment on this is if it's a biotech and it's a one-trick pony, then you better make damn sure you know that that pony is the real deal. Okay. Uh, with these biotech stocks, look at this drop up in here. I mean, woof, that is from $20 down to what, $2? That is some major pain. So when you look at this stock technically like this, and they did just have an earnings report, you've got to know that you're not going to have another drop like that. So for me, if I'm trading biotechs, I want a company like Amgen or someone that's got a well diversified portfolio of revenue generators and a decent pipeline, but not just all pipeline and promise, because then you're subjecting yourself to that. And no matter how good the stock looks technically, you're always vulnerable to that monster drop. I don't like those.
See here. All right. When a QRVO, someone asked about that as a short. Yeah. I mean, this thing just keeps a huge drop, which I assume is an earnings drop, and then it just continued on down. Right now, QRVO continues to be a pretty good.
Yeah, that's a short.
Yeah,
That's a nice little short. Yeah, that's like everybody out of the pool. That is a nasty follow through. That big drop right there, it compresses for a little bit, and then now you're getting your follow through selling when the market's been higher. So, yes, that is a very nice short.
Someone asked, what's your opinion on swing trading wheat futures around May or June during droughts in the harvest season? My opinion is I'm pretty sure everybody knows about those droughts during harvest season. So if that's what you call priced in, right? Do you know what the market sentiment, the report timings, do you know what the weather tracking is? Million different things, the unpredictable yield reports on those things, the supply concerns. I mean, compared to previous years, that's what's going to matter. It's not going to matter, that a seasonal trend is taking place, because everyone knows about the seasonal trends. What's going to matter is the things that people don't know about, and that's something that you can't take into account. So I would, it might be a good play, it might not, but it's certainly not going to be a good play just based off of something that everybody is aware of.
Yes, and so you have very large companies, agricultural companies with boots on the ground. They are looking at the state of the crop. They know exactly what's happening. They've got forecasting models for rain, and they are using all that for their hedging and to price where the futures might possibly be. Do you have that kind of information? Probably not. Bottom line is trade what you know, okay? And if you, my wheelhouse is equities and their relationship to the S&P 500 and being able to conduct technical analysis on the S&P 500. I don't need to deviate from that, okay? Michael Jordan tried to be a baseball player for a while, but what he was really good at was basketball. Stick with what you know.
Yeah. Yeah, I remember that. Chicago White Sox. Nice try, Michael. But yeah. Can you
And then he
imagine what
came
his
back
stats
and
would have
won.
been at the end of his career if he just decided to stick with not retire for a couple of years and go back?
Yeah, then he came back and won 3 basketball championships. So I have my long of the week, and in the spirit of continuing to use weekly charts, this is a really nice breakout on PANW. That is your pick of the week. You can see how the stock has broken through that horizontal resistance, and we have follow through, and that's very apparent when we go into the daily chart. And you can see how the stock has been able to break through this horizontal resistance. So choppy stock, you can see how it runs up and it pulls back, runs up and it pulls back, runs up and it pulls back. So I'm going to be looking for any kind of little dip in here, and I'm simply a dip buyer when a market starts to show some signs of strength. Now, market, let's talk market M5. There's your test of the prior day's high. We tested it once before. Now we've just gotten smacked down. You see that bearish engulfing candle right in here? Looking for some follow through in here. We know this is a very wimpy, choppy move higher that should be able to reverse. So I'm watching for signs here, and then I would, if I were trading futures, I'd be looking to short in here on a lower high double top or a breakdown below this level right in here. So that's how I would be playing it right now. Coin has just done something. I had an alert set. Oh, probably based on your comment, Harry. You're saying, okay, coin, yes, it might look pretty good. I had an alert set at the prior day's low right here.
Mm-hmm.
And now it's starting to break below that. And as I just mentioned, we're starting to maybe entertain, if we're a professional trader, some shorts because we're starting to see market resistance. So that's how all the pieces fit together.
Coin's about to go into maybe the daily gap here, and if it does, then yeah, that might be a decent day trade short.
Yep.
All right.
Any remaining questions up in here?
There's a few, but
IONQ, that's been a really hot stock. It looks nice. I mean, I'll bring it up.
yeah, I like that stock. Hard not to.
There's, you can see choppy back and forth. So when you get the dips and you find that support, then you know that you can buy that stock with some confidence. There's your bullish flag, and then Zoom post earnings, really nice, heavy volume, good for day trading, computer hardware technology.
Yep, look for those dips. As long as I'm going to be looking at SPY 600 for the rest of the week. See if we can get above that. And until then, I have Amazon long and Qualcomm short. And you are long PAN W.
PANW, I like it. All right,
Perfect.
everyone. Thanks so much for attending. Harry, thanks for all the great analysis. We will see you next week. I will do a video on Sunday. So we will see you then. Thanks, everybody.
Thanks, everyone. Thanks, Pete.
Good well.